Oh, you're welcome.
We have a fabulous presentation here this afternoon because everything we teach is going to be amazing. And breakouts occur in all types of trends, up, down, and sideways. Today, we're going to be focusing on a particular type of breakout that's from a bottoming pattern. So bottoming patterns happen after they have been beat up for whatever reasons, who cares? And that leaves what we call a price void, which means that they've had a momentum move lower, they've stabilized, supply and demand has equalized, and now demand is exceeding supply, and there's various tells, as I call them. Tells, it's kind of a poker analogy. I don't play poker, but there's a lot of professional similarities to what poker players do to what we do, in my opinion, as technical traders. This is a snapshot of a one-page summary of our approach to trading anything that moves, any time frame, any instrument, stocks, options, cryptocurrency, futures, commodities, it doesn't matter. This is how I'm going to find opportunity. We are looking for a compelling price pattern. The reason, I mean, we use candlesticks, of course, but people lie. Analysts lie, officers and directors lie, analysts lie. Charts don't lie, as we say. So a chart reflects the sum total of all market participants that have put their money on the line, and that forms a picture that we are trading to be on the right side of supply and demand. And these are our concepts. So give me a price pattern. Then we take that pattern and we say, okay, well, you know, where is this picture in the overall trend? So is it on support or resistance? What is multiple time frame analysis? Are they in agreement to increase the probability of the bias of the time frame you're trading to succeed? Is it showing relative strength or weakness to the broader markets in the sector? You know, we say volume and moving average. You'll see them on my charts here momentarily. We call them secondary because I don't need them. All I need is price action. I need a pattern and in connection with trend, support, and resistance, etc. But we say they help speed up the analysis, and I'll obviously show you that, and that's going to be an important part to trading bottoming patterns. You're going to see, you know, I have a lot of charts here. We'll get through as many as we can in the allotted period. If we just write this down, since we're talking about bottoming patterns, stocks that are beat up, just and you know, if you have software even to do this, but you'll see them once we get through the examples. I want the setup, the breakout of a bottoming pattern to be far from the 200 period moving average, because that confirms that it's beat up. And then I want the 20 and the 50 to flatten out. So that's a visual sign telling me that the selling has eased by definition, because what's a moving average? It takes the closing bar, adds up the prior X bars, divides by that number, and prints a squiggly line. So if the 20 and the 50 are flat, by definition, that's telling me it's consolidating. Now that consolidation could be a consolidation in a downtrend. And I'm purposely going to show you some examples here to say, look, these are bad examples. It's bad price action. There's no tell that it's going to break out, etc. What are the broader markets doing? Of course, we have different market internal levels for both day trading and swing trading. And listen, folks, if you don't have proper position and money management in your trading plan, in trader psychology, which I can kind of summarize that says, look, do you have the patience and discipline to follow your trading plan? That's what trader psychology is in a one sentence to me. So the nut behind the keyboard, our courses can teach you exactly what to do, but it's the nut behind the keyboard based on emotion or lack of experience, lack of knowledge of what we teach, that they're going to do, you know, some things that don't make sense. But that's part of the learning and seasoning process. But everything starts with a solid education, and from that point forward, you start trading very small position size, and then everything's about the seasoning. Like, I'm a private pilot, among, you know, many other things. I only have a couple hundred hours of experience. I know many commercial pilots that have over 40,000 hours of experience. Who has more seasoning? I mean, right? That's a rhetorical question. But I've been at this full time for over 25 years, you know, 50 years, if you count my days trading in the Schwab office when there was no internet in the lobby on their little cubicle over lunch. And so I have this unbridled confidence when I see a pattern. That doesn't mean a trade's not going to work. If anybody tells you, oh, I got 99% accuracy, follow me, I got the magical indicators, you know what? You should run, because that's such BS. I mean, we have like an 85% batting average, which I think is just incredibly impressive, because there's some people who think charts don't work and they think it's a coin flip and they trade mechanically, they don't believe in charts. Well, 30 years, 85% is pretty impressive. So, you know, if somebody claims they have a 99% chance, then they would have billions of dollars thrown at them from Wall Street to have an ATM machine. So, you know, there's no pill for you to lose weight, and you can eat whatever you want and don't have to exercise, you know, same kind of thing. These are all just bullish setups. And then you go to the prior slide, and like I said, okay, well, here's a buy setup. Is the buy setup in an uptrend? Is it on major support or minor support at the rising 20? Multiple time frames are in alignment. The sector showing relative strength to the sector in the market, and then I got a high probability trade. So we're not talking about any one of these today, but we have many setups. Today we're talking about bottoming patterns. Let's continue. I said in the intro that breakouts can occur from any trend, up, down, or sideways. It could be a breakout from a continuation in an uptrend. It could be a breakout from a sideways trend. And today we're going to be talking about, again, after a prolonged downtrend, it is stabilizing supply and demand. It's moving sideways for a couple of weeks or months, and then it's breaking out of a bottoming pattern. Here's my little poker guys that you're going to see. Every chart I'm going to show you, I'm going to talk about the tell, because many people say, well, how do you know it's ready? Well, I can't put that. I can't give you a black and white answer. I'll tell you when it's ready when I see it, and that's part of the education, to teach you how to see it also. Here's just some, you know, some considerations here. Greg Capper, my partner, I've been working with him for 25 years. He's just the best technician I have met in my life. And this is one of his things. Bottoming patterns are treacherous, particularly if you don't know what you're doing. But you're gonna be significantly more knowledgeable after it's completing this 45-minute webinar today than you were beforehand. I promise you that. So we're looking for these clues to make them not treacherous, but to make them high probability setups. Starting point, see, they're in downtrends. So they failed to make a lower high, so they break the downtrend. That does not mean it's a breakout. It just means that's step one. They broke the downtrend. Like I said, it could be a consolidation to resume the downtrend. We're looking for turns. Typically, it's not required. The charts I'm showing you are mostly going to be on the daily charts today. But when you think you're close, you're on major support, it's down a lot, it's okay to go to a smaller time frame to get in on the turn, anticipating the larger time frame to follow through to the upside. I'm not talking about topping patterns today, but the reverse of everything we're going over today is the same. And particularly, so this is not today's session, but I'm going to give you a gift right now. Write this down. This is a gift. Climactic buy setups. So they're down 5 or more fluid bars far from the 20-period moving average. You're waiting on the turn. Drop down to an hourly chart. I use a 65-minute just so there's an even 6 bars per day. And wait for a breakout on the hourly chart to get into that climb-o on the daily. I know you can't talk to me right now, but conceptually, does that make sense? All right, so we're looking for something here to give us the, this is old, remember Jacques Cousteau, the investigator? That's the event I'm looking for. I'm looking for clues that it's ready to go. All right, now we're going to just go through as many examples as we can now in 30 minutes. This is our daily chart. This simple. Color-coded candlesticks, color-coded volume. The blue is the 20, green 50, red 200. So notice, folks, I could actually take the candlesticks off the charts. We do not trade moving averages. But the point I want you to visualize is if you take off the candlesticks, I have a long-term uptrend, the 200 MA. I have a short and intermediate term correction or pullback within a long-term uptrend. Now, all 3 moving averages are converging. What is my tell here? What is my tell to say I am ready to buy this stock? The tell is this red bar was a small little rejection. It closed under 2 candlesticks rather. The next day it gapped up, traded above this ugly red candlestick. In the term price void means there's insignificant resistance because of the big move down. So here's where it broke down. And here's where it's rebuilding over time. So the entry on this is over the red bar. Share size it with your stop loss under the low of this red bar and manage in between. Now, when I say share size, our spreadsheet, we have 3 different advisory letters at Master Trader, and we just our spreadsheet just assumes a $300 max loss per trade. So the spreadsheet says, okay, if you're entering over the red bar, stop under here. It looks at the entry and the stop, and it spits out the number of shares that you should be buying where you have a $300 max loss per trade. That's right on our spreadsheet. And so you buy there, you manage in between. Now that I have this wide range bar, stop is under this low, and I'm managing in between. I just grab this. This is after we entered. Look, let's say we entered at 950, let's call it. You know, just 970, whatever. I don't have the exact number. Look, it went up to almost 13 bucks. We're swing trading. I'm not marrying these things. You aren't going to hear me once say I'm talking about core longs. And we define core longs as holding period from weeks to months. You're not going to hear me say that today. We're traders. Swing trade to us is 2 to 10 days as a general rule. So we were in this 3 days, nice return, off to the next trade. Momentum moved down. It's rebuilding over time. My 20 MA is flat. And you can have multiple tells. Remember I said, I'll tell you when I see it. Do y'all remember the US Supreme Court in America when they were trying to define profanity? And they said, well, you know, or maybe it wasn't profanity, but and the justices said, well, you know, I'm not quite sure how to define it, but I'll tell you when I see it. So it can be, I could be watching bottoming patterns for weeks. So let's start here. Wide range bar, bull 1, 2, 3, broke down, snapped right back. So this is now an inverse head and shoulders if it breaks this neckline. This bar was a bearish gap down that filled the gap, range expansion, and closed bullish. Do I buy over the high of that bar? No, because there's no, you got resistance. But I'm paying attention now. Now it broke out, went sideways, gap down, small little green bar. Now I'm buying over the high of this bar. This is a closed trade. We track all open and closed trades in the members area for subscribers. We give them the date, the symbol, stock or option trade, and we give the technical setup. Break out of a bottoming pattern at the 20 MA, W bottom and new low plus weekly. Aha! Remember I told you on the first slide, multiple time frame alignment it's one of our attributes to support the bias of this. Well, this is beyond today's discussion, but I see the W bottom. How do you see that, Dan? Well, I'll tell you, because 5 bars on the daily is 1 bar on a weekly. So here's my momentum move, here's my counter trend, and here's my new low reversal. So that's a W bottom right here. It's a W bottom, new low plus reversal weekly. We're buying here on the breakout, and we give obviously a stop loss, and we manage in between. So we were in this 12 days, made 15% return on capital. Here's an example, horrible quality. Let's talk about that. Why is this horrible? It just fell out of bed. This has to be news. That's an igniting gap, continuation gap. Has it stabilized? Yes. Still below the 50, 20 MA flat now just because of these bars going sideways. So if this were to break out, I wouldn't mind selling a put spread under support. And that's what we call an income trade, where I would never buy this because it's garbage quality. But if this takes out the high of this little red bar here, I would, and we have a checklist, you know, you got to make sure they're liquid, good premium, no, you know, pending news. I have a whole checklist. But I would be looking to sell the 210s, buy the 200s. That's what's called a bull put credit spread. the net credit received as your potential maximum gain. And as long as it stays above 210 by expiration, you keep the money. It's a wonderful strategy. Look at this piece of garbage. Kind of same, you know, it's the same garbage, but this one couldn't even get up to the neckline. So this one's weaker than this one. So this one put spread, this one 0. I have no interest in you. There's no pattern, no setup. Momentum move, breakdown, igniting bar that closed above all these. Let's just call it above 10 bars. Would I buy over the, this is what we call a 1, 2, 3 continuation. If you go to the slide that has 9 bullish pictures, this is one of them. One of my favorite setups. Would I, Dan Gibby, buy over the high of this? No. Why? Look to the left. There's still a lot of resistance to get through. But I'm monitoring it. Once this bar closed like this, I am watching you day by day. Deep retracement, still iffy. Gap down. Now I have a closing breakout of these 20 or so bars. Bull 1, 2, 3, but it didn't trigger. It didn't, the 1, 2, 3 is triggering over the high of the 2 bars. It continues to go sideways, bobbling around. My 20 and 50 are now both flats. Now I'm ready for the trigger. The trigger could have been over the high of the stopping tail, but this trigger was a gap breakout. You know, we love gap trading in our green trading room. So I'd probably buy a 5 or 10 minute high, or if it pulled in a little bit intraday, buy setup on minor support. But that's my entry, stop under the low, manage in between. Yeah, Greg, my partner, he's funny. He has all these, I call them capperisms. And on, you know, any trade, you know, those 9 pictures, even though we have many more, he says it's the same but different. And that's where you want to get to in your education, is having the knowledge to interpret price action to come to the same conclusion. You're never going to get the identical bars, but the message is the same. Similar to the poker player. It doesn't matter what hand he or she is dealt. They have the knowledge and experience of how to handle that deal. Same but different. Collapsed, new low reversal, breakout, going sideways, red bar ignored, 180 reversal. Actually, I don't have an arrow here, but this would have been a very suitable entry right here. It's called a buy setup after a breakout of a bottoming pattern. See, I traded these red dots and blue dots are pivot highs and lows. We have nothing proprietary. You know, some people try to sell you that bag of goods to try to line their pocket, and you know, that's not our style. We give you everything. We give you everything. So a pivot high is, the way we define it, is simply 3 or more lower highs to the left and the right, pivot low, 3 or more higher lows to the left and the right. This traded over a pivot high, so it broke the downtrend. And here's my bottoming pattern. You could have bought here. I guess I didn't see it at the time, obviously. But here's a secondary entry, a 180 reversal. A 180 was also on that slide of 9 bullish pictures. Here's my price void. Price void means there's insignificant resistance to the left to allow for a big move up. In this one, we bought call options instead of stop stock. That's a directional option trade, and I love buying calls and puts when they are liquid. That is the biggest problem, that there's only, I'd say, 125 liquid options, but you get the benefit of leverage and limited risk. So on this thing, instead of, let's just say, instead of paying $12.56 a share, I'm paying 55 cents a share. So if this thing gaps down to $1, let's say, I lose 55 cents a share. And if you bought the stock, you're going to be seeing a psychologist on the loss. Here's another one, different stock, momentum move, same but different, same but different. This broke out, bullish price action, could have bought here, this buy setup, I have this one marked. And then it broke out again, red bar ignored, bottoming tail. I would buy over the high of this red bar, target 28. Resistance over here. Same but different, same but different. Rising 200, 20 and 50 flattening out. This bar looked good, but no follow through, it didn't trigger. But that's okay. It's going sideways for 4 bars, building a bigger level of support. We're going to buy over this green bar, target, gap fill, and then go into trail mode. Wide range bar breakout from a bottoming pattern at the 20 and 50, and just 3-day swing trade. We're swingers over here. No tells. And so you know, one visual clue. Let's look over here. Some of you might say, well, Dan, you know, based on these other patterns that you've been showing us, why momentum moved down? Why could I have not bought here? And had I had a potent enough turn, I would say, well, you could have, but I'm giving you another gift right now on bottoming patterns and the 20 and the MAs. Remember I told you, and I'll go look at all the other examples. I want the 20 to flatten out at a minimum, preferably the 50 also. Look, had you bought here, look at the angle of this 20 and 50. The angle of those two parallel and down is telling me that selling is monumental. You cannot get sucked in with one green bar. Does that make sense, you all? Look, this is a different chart, but the same, it's same. It went sideways, it stabilized, but this is a consolidation in a downtrend. This is actually Tesla back earlier in the year. So, you know, most of these I take the symbol off because it really doesn't matter. We're teaching patterns, right? But I wanted to leave this one on here. I'm looking up right now. I have 6 screens set up here in my office. Tesla is now trading at $485 from this setup. We were watching this because the weekly chart was a climactic buy setup on major support. So I was watching this the entire time. We actually did buy this one for a little swing trade, sold puts, came down, red bar ignored, sold puts. I'm still waiting to go directional because it's trading chaotic. Now it broke out from a bottoming pattern in its bullish price action. We gave this to subscribers to buy over the high of this consolidation. Not saying I'd still be in it. Trust me, you know, I'd never mislead. I'm just making a fact that it's $485 from this turn on the daily weekly. Go check it out. This is what we call a 1, 2, 3, 4 from a bottoming pattern. So downtrend, right? 2050 down, deep move into resistance. Where is my entry? I'll tell you when I see it. It's surely not after 5 up bars. It surely ain't there. Go sideways, sideways, bottoming tails. Bottoming tails means there's buyers lurking below. The 20 MA flattened out. Wide range igniting breakout, inside bar, second inside bar that takes out the low of the other one. That's what we call a 1, 2, 3, 4 instead of a 1, 2, 3. Price void. Just now, this one I would only sell half because this is powerful. This is a powerful reversal from a bottoming pattern. So I would sell half under a prior bar's low. My next target is 108. 108. This is powerful picture right there. This one flat 20 and 50. Look, this was a gap breakout, but it ran too much. And then the next day it gapped up. I ain't buying that. I'm not chasing. I don't chase. So I watch for a setup. Here's my setup, a buy setup, wide range reversal, bullish 1, 2, 3. I'm buying over the high of this 1, 2, 3. Look, it has a bullish weekly and monthly, even though you can't see it. We held on to this 13 days. I guess we bought this buy setup right here, but you could have added on the 1, 2, 3. So we bought call options. Look, 160% return on our call options. So our green room here is, we start at 9 a.m. and my partner Greg Capra gives market review, intermarket analysis, just gets you ready for the market day, having a bias for day and swing trading. I come on, I go over open trades, gap trades. I love gap trading, and it's an amazing place for hands-on learning while the market's open. I mean, hopefully you all are learning a ton here, but we're looking at PowerPoint slides, right? So some people are probably correctly sitting there saying, oh, well, okay, Dan, you know, you sound like a genius, but you know, show me in real time. I will be happy to do that. We do it every single day in our live trading room. And people ask questions, we show charts, we scan. It's like, you know, you go get the course, and this is hands-on application of the course every single day. This is our year-end specials. I'll show you a different page in a few minutes here. We only have 10 minutes left, but I heard Greg say the math today. It's like $1.60 a day for you to come into our green trading room. The amount of education you get in there is unbelievable. These trades I'm showing you where I say, oh, this is a open or closed trades. This is our advisory swing and options trader. We buy stock and options, and we give you the setup, the education. So you're actually earning while you're learning. Another bottoming pattern, got shellacked here. Supply and demand are stabilizing. You could have bought over the high of this green bar right here. Topping tail there, we entered there. This one we just shorted a put spread, and then you collect 65 cents a share if you do a 10 lot. As long as it stays above 70 bucks in 4 days, you make $650. Breakdown failure, deep retracement, going sideways, breakout. Weekly, here's my new low reversal. Remember I showed you a different chart where I said how could, you know, I can visualize a new low reversal. Momentum move, made a new low and snapped right back. Here's my new low on the daily, snapped right back. Gap breakout of a bottoming pattern, followed by a bullish engulfing bar at the 2050 right here. We bought calls on that. Manage in between, has a price void, daily, weekly. This is a different type of bottom, a W reversal pattern. So it's down a lot. There's my momentum move, bounces. This is like a textbook W bottom. You know, there's different flavors, same but different. So it comes down to retest support, and we're looking for the tail. There's my tail, my wide range bar that closed above these prior 4 bars. That's my entry. Inverse head and shoulders is another type of bottom. Gap down, you know, it doesn't have to be a gap, but that's my left shoulder. The head is a new low, and then it makes a 100% retracement of up to the neckline, and you have bullish consolidation. Here's my bullish close at the neckline. That's where we enter. You have a price void, target gap fill around 56 or whatever. What is my tail? 20 MA flattened out, made a new low, 1, 2, 3, 4, no brainer long. See, I have, you know, like my pilot friends with 40,000 hours. I have so much confidence in technical trading when I see it. Greg and I, you know, we just give each other symbols. We never say, well, what is that? What are you thinking? As soon as we give each other a symbol, we know exactly what we're looking at. Now, sometimes I might say, are you thinking put spread or directional? Because this could be a $50 put spread, but all directionals have the quality to qualify for a put spread. So this one's a directional, but I would also be looking at the option table to see what I will get paid for selling a $50 put or $5 white put spread. I guess sell these questions. My bad, y'all. Okay, green bar above red bar. Richard. All right, sorry. I'm not sure I got to that late. Email me, Richard. I'll be happy to help anybody out. Everyone, email me, dan@mastertrader.com with any questions. I mean, Greg and I, you know, some people say, well, why do you and Greg teach? I mean, you two are amazingly qualified. Why don't you just sit in your office and trade yourself? The answer is, I'm going to tell you the answer. Number one, it keeps us sharper. To get prepared to present to our clients, we're on YouTube every 9 a.m. with our pre-market review. Go check it out. It keeps us sharper. And of course, we both trade our own accounts very aggressively. We enjoy teaching and helping people. We have thousands of testimonials of changing people's lives. We love that. So many people we get, unfortunately, come to us when they say, I've been beat up, I got misled, I got, you know, some dude sold me his oscillator, magical lines, my wife's divorcing me, and now I know I'm at the conscious incompetence level. I'm so glad I met you. We get those people, and we have fun in the trading room. We have, you know, all 100 people in our trading room, and so those are additional eyes of people feeding us good trade ideas. All right, let's continue. I only got a couple minutes left here. And we also do what we call Master Trader Live. Wednesdays on YouTube. So Greg and I, we just pick a subject. We've been doing it for 10 years now. And we give you free education, just like we're doing right now. And it's called MT Live on YouTube. Igniting bar, flat, 20 and 50, price void. Y'all see, I can go over 100 charts here. You see, it's just same but different. Price void, flat, igniting, 1, 2, 3, 4, boom. It's same but different. Okay, why is this one same but different? Because I have a downside shakeout. And I have a 1, 2, 3, 4, and then it went sideways. We'd be buying over the high of this green bar right here. Right there. This guy is a downside shakeout. This red bar suggested lower prices. Totally agree with that bias. Guess what? Using bar by bar analysis, your bias better change with facts. Here's my price void. 1, 2, 3 continuation at the 20 MA after downside shakeout. Do y'all see this? Same but different. 1, 2, 3. Same but different. 1, 2, 3 going sideways. You can do it again here. This one, the weekly, is a climactic buy setup. Going sideways, far from the 20. What got our attention on this one was the gap reversal on negative earnings. Ha-ha. You had a chance to break down and you didn't. And you closed bullish. That's my tell to go long. Buy over the high, stop under the low. All right, so you can see here's a buy setup after a breakout, just vanilla. Oh, write these down. These are 2 on our watch list right now. OEC, I grabbed this chart an hour ago before I started. This is a bottoming pattern. 20 MA flattened out. Buy this tomorrow over the highs of all this. Stop under these 3 bars. There you go. Bottoming pattern. This one, FMC, you can buy over yesterday's topping tail. Marijuana had a big old gap on some news. I'm watching these, but because the gap was so big, they need to give me a pattern. So if they can go sideways for a week or 2, then I'll tell you when I see it, right? This I'm just showing you for fun. This is back in 2020, Bitcoin. This was the absolute low of Bitcoin for all-time lows. Bitcoin right now is trading at about 85,000. And look at this breakout from a bottoming pattern. Today's subject. Boom. This is our holiday special. We only do this once a year, the most amazing specials. We have bundles of stock and option. I do all the option courses. Greg, my partner, does obviously the technical analysis courses. We have them separated if you wanted to buy the separate one, MTS courses, option courses. Here's the green room. I showed you the link above on the green room and the advisory letter. I showed you those links. Best prices of the entire year. Do yourself a favor, buy yourself a Christmas present. Buy one of these courses that we have folks buy these who have been in the business 20, 30 years, and they email us saying, you've drastically changed the way I look at the market for the better. So again, any questions, email me, dan@mastertrader.com. Happy holidays, and look forward to seeing you in the next webinar.